IRS just announced changes for how they're going to be reporting qualified charitable distributions. That very beneficial tax planning strategy in retirement, they're changing how it's going to be reported starting in tax year 2025. I'll explain those details and what questions remain after this announcement. That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. A qualified charitable distribution, the QCD, fabulous tax planning strategy in retirement. For those of you that donate to nonprofits, to the church, to charities, it can be an enormous tax benefit, and far too few people are utilizing it. It's something you need to work with your certified financial planner on. Even if you say, I'm not going to be eligible for a long time, it can impact your planning today. Well, guess what? The IRS just announced changes to how they're going to be reporting qualified charitable distributions starting in 2025. And guys, these changes actually are enhancements, and yet some big questions remain that could influence your planning. First, what is a qualified charitable distribution, or QCD? You know, with your pre-tax retirement accounts, your traditional IRA and your 401k, pre-tax 401k, 403b, that sort of thing. As you are making contributions to those pre-tax accounts, those are tax deductions. It's a deduction on your tax return in the year that you make that contribution. So it's pre-tax money in. As those dollars are invested and growing while they're in that tax shelter, while they're in that IRA or 401k, there's no tax consequence. It's all tax sheltered, okay? But then when you withdraw those dollars out there in the future, both the money that you contributed and the growth, that's when it's taxable to you. So that's how traditional IRAs work. That's how pre-tax 401ks, pre-tax 403bs, that's how those work. Well, what if out there in retirement, you are withdrawing dollars from these pre-tax accounts to supplement your Social Security and your other income, but then also on an ongoing basis, say every week or every month, you're donating to the church or donating to charity? Do you get a tax benefit for those donations to nonprofits and to charity? Well, only if you itemize your taxes. And with the standard deduction being so high, or maybe in those retirement years when you don't have a lot of state taxes and you maybe don't have mortgage interest as well, you're not donating enough to be able to itemize your taxes, and therefore you're not getting a tax benefit for those charitable contributions. And that's not why you're doing it. However, if there's a way to get a tax benefit for blessing the same organization, you should be aware of it. That's just good stewardship. Well, enter the qualified charitable distribution. If you qualify, you can do a distribution directly from your IRA, not your 401k, not your 403b, directly from your IRA to that end charity, to that nonprofit, to the church. And that money comes directly from your IRA, goes directly to them, and it doesn't land on your tax return if you do it right, okay? Well, then does the church or the nonprofit pay tax on it? No, because they are nonprofits. And therefore, this is a way for you to have cash flow, go to bless and benefit the organizations, nonprofits you care about, without it being taxable to you. It doesn't land on your tax return, and therefore you don't need to try to itemize your taxes to get a tax benefit. It's simply not taxable to you, doesn't factor into the taxation calculation for Social Security or for income-related monthly adjustment amount, IRMA, for your Medicare. Fantastic. Well, I mentioned we've done a lot of content on these because a lot of folks should be using qualified charitable distributions that are not, okay? It's got to come out of an IRA. It doesn't work if it comes out of a 401k. You also have to be age 70 and a half or older. So a lot of times people are already in a rhythm and a consistent, I make this sort of donation to the nonprofit or to the church, and I like how I'm doing that, and we'll need to change at age 70 and a half to receive the benefits of the qualified charitable distribution. Well, like I mentioned, when you're doing this qualified charitable distribution, it's not taxable to you. How do you ensure that it's not taxable? Well, you're going to get a tax form, a 1099 from the company where your IRA is, and you just have to indicate with your CPA, with your tax preparer, hey, listen, X amount of that or a certain amount was a qualified charitable distribution that shouldn't be taxable, and then they fill it out correctly on your tax return. Well, right now, the IRS just announced a new tax reporting code for qualified charitable distributions. That's right. It will now be indicated on your 1099 from your IRA custodian, sorry, but that's technically what it is. So Fidelity or Schwab or American Funds or whatever, on the 1099 saying, hey, listen, IRS and taxpayer, you took money out of this IRA. There's a code, now code Y, starting in 2025, that's going to say this was a qualified charitable distribution. That's going to be tremendously helpful because a lot of people, if there wasn't great collaboration, if there wasn't comprehensive financial planning being done where the tax planning is coordinated with the tax preparation, or the investment and retirement planning or estate planning isn't coordinated with the tax preparation, then oftentimes these QCDs would be missed because the CPA or the person doing TurboTax would just simply input, the information from the 1099 and not realize there was an extra, oh, wait a second, of this money that's showing I withdrew from my IRA, X amount isn't taxable because it was a qualified charitable distribution. This is going to help solve that because it's going to specify that, no, this amount that came out of the IRA, code Y, that was qualified charitable distribution. So overall, this should be an enormous help and help avoid a lot of mistakes. And yet, some big questions remain. First of all, this is going to mean you could get more tax forms and could actually mean tax preparation gets even more complicated, or there could be more forms when you're filling out and filing your tax return. What do I mean by that? Pretend that you had one IRA and you were supplementing, you were making some withdrawals from your IRA, but you also were withdrawing some and having it go as a qualified charitable distribution. Currently, before this new rule, that would all land on one 1099, and it was up to you to make sure that you said, okay, of the $50,000 I withdrew from my IRA, $5,000 of that was a qualified charitable distribution, so only $45,000 is taxable. In the new world, what this is suggesting is that instead of getting one 1099, you're now going to get two. One showing the $45,000 is taxable to you, normal distribution code, but then another, a separate 1099 with distribution code Y, saying this was a qualified charitable distribution. So it could mean taxes are a little bit more complicated to prepare, could be more forms required as well. Another big question, and I would argue probably the biggest question, is there is a limit on how much qualified charitable distribution someone can do in any given year. Currently in 2025, it's $108,000, and if you're married, you can each do that. So that's a per person limit. And you might say, I'm not doing that much, but you could, okay? Well, with this new tax form, how will they know? If say you've got a few different IRAs, an IRA at Fidelity, an IRA at Schwab, an IRA at American Funds, and you're doing qualified distributions from each of those, how will they know whether you exceeded that limit? And you already sent the money to the charity, so if you're not aware of that annual limit, and maybe it was dispersed, then how will that be reconciled if you accidentally go over that limit, because it's going to be up to those custodians to report this properly? Well, they don't know what the right hand doesn't know what the left hand is doing. Possible you could exceed the limit without knowing it, create an enormous mess for yourself. Another wrinkle is how will these investment financial institutions, these custodians, know that that's a valid charity? It's possible shell companies could be created as nonprofits, but they're not actually valid charities and therefore wouldn't qualify for a qualified charitable distribution. And yet now it's on these custodians, Fidelity, Schwab, the likes, to confirm, nope, that is a valid charity. I will distribute these dollars and I'll submit a tax form saying that does qualify as a qualified charitable distribution. That's another wrinkle. And then lastly, this release came out midway through the year of 2025. What about qualified charitable distributions that were already done earlier this year? Are those going to be kind of tucked into this new tax code, or this new 1099 code, or will you have potentially two different rules that you need to follow, or two different approaches that you need to follow for 2025, making filing this tax return a little bit more complicated? So while this is good news, this change, there are some big questions that impact your planning that remain unanswered right now. The biggest question, though, is should you be doing qualified charitable distributions? And if you say, I'm not yet 70 and a half, that's still a long way out, should it influence your planning today? Should that mean maybe less of your dollars should be contributed to the Roth side of your 401k, because out there in the future, you're going to be charitable with the pre-tax side, doing fewer Roth conversions, that sort of thing? How does this impact your planning today? work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.